Activist investor Elliott Management has built a stake of more than $1 billion US in Lululemon, according to Bloomberg reporting. This comes after the CEO, Calvin McDonald, said he'll be stepping down at the end of January. Our guest says he thinks the CEO change at Lululemon may have been sparked by Elliott. Let's get more from Jamie Murray, president of the Murray Wealth Group. Jamie, thanks very much indeed for joining us. So Lulu is on your radar, and you think Elliott, which does like to make its feelings known to companies, may have helped squeeze out the CEO?
Yeah, so we repurchased Lululemon shares this past summer when it dipped below the $200 mark. We saw a very strong franchise, I think similar to what Elliott sees, like a great brand, still lots of growth opportunities globally, but just a little bit of sluggishness in the United States. And an activist coming in and potentially a management change was part of our thesis. And so now we've seen, those two boxes be checked. I think there was a lot of there were expectations that Lululemon would replace their CEO, but it came sooner than expected. And then so just the timing of the CEO announcement last week and then Elliott revealing its stake this week, makes me think that they probably got in there and started to nudge Calvin out a little bit earlier than maybe he would have otherwise been had they not come in.
And what is your, are you holding Lulu still then, Jamie, or have you lightened up on the stock?
Yeah, we're still holding it. It was a top pick of my colleagues on Market Call a couple of weeks ago. And I mean, this is a company that we think does still have growth opportunity in North America. We actually think they are still taking market share just in a very, very weak apparel market. And we think with some better product execution, some better merchandising, some better inventory management, and some maybe not necessarily a reprieve from tariff, but the tariff noise of 2025 being lapped in 2026, we think growth can accelerate. We think the multiple can move up from a 13, 14 PE multiple up to a 17, 18 multiple, along with the share buybacks. That should get you up closer to a $300 stock. So we're not going to trim until we at least see the stock moving over 250 unless our view changes.
You're not worried that the magic is gone from the company, though? It was almost a cult name among yoga wear enthusiasts.
No, we don't think the magic is gone. We just think it's maybe misplaced or a bit lost right now. We think that they still have all the elements there. We think there still is that strong core community brand. There's a lot of noise in the summer about leggings, tight leggings being, out of fashion and baggy pants being in. Our channel checks don't really show that. We think that leggings are still, still very on trend for young consumers. And it's just been a little bit of competitive pressure from some new entrants. And we think Lululemon needs to get back to its roots of highly technical apparel, some products that wow the consumer again. And we think they can do that with some good execution.
How about what's your AI play right now? Jamie, you're watching AI revenue projections from the likes of NVIDIA and Broadcom, and these companies see sharp increases ahead.
Yeah, so we've seen the AI trade really take a hit just the last week. Broadcom, one of our larger holdings, was trading at an all-time high after it reported its results in the aftermarket. Some comments on the conference call by the CEO, knocked the stock down, and now all of a sudden, a week later, it's down 25%. Oracle, obviously, I know you're just speaking about this with your previous guest, down 30, 40%. So we've seen a lot of the air get taken out of the AI trade. But when we look at the actual revenue projections for next year, they continue to go up and up and up. And so this is, I think, Broadcom's revenue projection for 2026. And this shows if you look back a year ago, 70 billion was the expectation for next year. Fast forward 12 months, now we're up to 95 billion. And you can see that even jumped after the most recent quarter. I think if you have NVIDIA's numbers, it's going to show the same thing. We're just seeing more and more spending on AI data centers and AI chips. And that just is confirmation to us that what we're seeing right now is maybe just a little bit of an air pocket in the AI trade, and the core thesis is still intact.
What's your thesis on BP? They're bringing in a new CEO with an engineering background. She headed up Woodside, the big Australian company. And this is seen as part of a switch by BP away from its emphasis on renewables.
Yeah, so BP started to do this refocus back on its petroleum and oil and gas business about 2 or 3 years ago, but I don't think it's been fast enough for shareholders. And they had replaced their former CEO with their CFO, and so you have a finance person running a complicated mega project oil company. And so bringing in the Woodside Petroleum CEO, who has a lot of experience managing large LNG projects and deep water offshore, makes sense to us. And that's really where BP, if you recall, about 3 or 4 months ago, they found a huge oil discovery offshore Brazil, and it's going to be probably one of the largest fields to be developed in the next 5 to 10 years. And so having some strong leadership there is really going to be needed to execute on that project well and drive the stock higher.
Jamie, thank you very much indeed. I really appreciate it.
Thanks for having me on. Happy holidays.
You too, Jamie. Jamie Murray,
Right.
president of Murray Wealth Group.